Hello, everyone. Welcome to GreenSky podcast, episode 17. I'm your host, Moien Giashi, and today I'm with Greg Stewart. Greg is the founding managing partner of GreenSky Venture Capital Fund and also currently the chair of the investment committee. Hi, Greg. Thank you for being with us.
Hey, Ron, great to see you. And you've been doing a great job with this.
Thank you so much. So, Greg, for the starters, why don't you start with your background? Tell our viewers, our listeners, a bit about your background, your experience, and your professional life.
Sure. So, like most people in venture, I came about it kind of through a circuitous path. Um, I was a finance background. I worked at a company in New York's financial community as a buy side analyst, covering the insurance industry and then small cap stocks. I went from there to be the CFO of an insurance startup, Florida-based property insurer. Quite a dynamic environment due to the hurricanes down there. And after that was about a 9-year run. That company did really well. It was ultimately bought by Progressive, which was the company we modeled ourselves after. So that was kind of validating to say you're going to be the Progressive of property insurance and actually become Progressive's property insurance company. And I didn't know what I wanted to do next. I didn't want to go to be an insurance executive in a less dynamic part of the insurance industry. So I took some time off on the road and then decided to get an MBA and explore options. And I really enjoyed my time in New York City. And I wanted to get back into a big metropolis with international flavor, and ended up going to the University of Toronto, the Rotman program. And when I was there, I did just what I was thinking. I was exploring many different areas. It was just before the Creative Destruction Lab was founded, but it was close enough that I did have a little bit of involvement in that. I actually wrote interviewed and had a published interview with AJ Agrawal in the Rotman magazine. But it was more the competitions, business plan competition, venture capital competition. The way I found GreenSky was through a student venture capital investment competition. And one of the companies that we were acting as if we were VCs, I established a bit of a relationship with the entrepreneur. And when I graduated, I reached out to him and asked him if he knew of any other startups looking for senior people. I was thinking COO, CFO. And he said, well, this company I'm working with they have a lot of relationships. So maybe talk to them. So I reached out to GreenSky and they said, what about working here? And so I started with GreenSky in 2013.
And so initially, I know from the history that GreenSky was not a fund,
That's
and
right.
then you
That's right.
became the founding managing partner.
That's
How
right.
did
In
that
those
process start?
in the early days, GreenSky was kind of a lot of different things. But like we acted somewhat as an accelerator. We got much more involved early. We would help companies build their first real decks, their financial model, and we were broker dealer. We were what's called an exempt market dealer, which just is a broker dealer that can only do work with high net worth individuals and other entities that have credibility in the financial industry. And we were raising capital for startups and taking equity positions as well as some cash through that process. So we had some winners for sure. I know Jeff Simonet was on the podcast, and he was Mike List's original founding partner of the EMD. And Wave Accounting was one. OTI Lumionics is a kind of an under the radar success story in Toronto. And it was good, but it was an old business model. It was a dying business model. I don't know if it had ever been a business model for tech in the US, but it was clear that there were enough free accelerators, university based, and it was an investment community that was coming together, the business model was really no longer valid. Mike and Jeff's original plan was, in fact, to have proprietary capital, to be a VC. But we hadn't established enough of a track record, which takes many years, and the timing was unbelievably fortuitous. I didn't stay with this insurance company I worked at until the exit. I left a couple of years before that. I left that once they weathered the financial crisis. I thought that was a good time for them to potentially change CFOs and for me to travel and get back to a bigger city. So that exit happened right as we were really contemplating whether we could continue in business as an EMD and accelerator. And Mike List loves this business, as I'm sure your longtime listeners and viewers know. He was a corporate transactions lawyer, and like many lawyers, it's not that much fun. So he said, if you use some of this exit money to buy out Jeff, and he has had many successful entrepreneurial ventures, that we'd go out and raise a small fund, and knowing that we wouldn't raise enough capital to pay ourselves for a while. So we committed to it, raised a super small fund, and as you know, we're deploying the sixth fund now.
That's definitely a very exciting journey. I mean, I've been working with you for the past 4.5, 5 years, so it's been very exciting for me. I wasn't involved from day zero. I think Neil was definitely involved when the fund started, but it's very exciting to hear the story of how GreenSky was formed, especially when I talked to Jeff Simonet. We went back to 2007, 2008, and like his journey with GreenSky, and then you coming on board. So it's definitely great history in the making in those times. So tell me a bit about your experience in investing in startups from Fund One all the way to Fund Five, Fund Six. You've been working with a lot of startup companies. You came from the corporate executive side. You came from the kind of public market side. What are the differences? What are the similarities? What did you see? What excited you the most?
Right. Well, putting to the side tech, which I didn't work in those previous jobs or cover when I was in insurance, to some extent, it is a combination of those two skill sets, because you are investing, obviously, but you're not investing based upon fundamentally, especially at the seed stage, upon financial results. Certainly not financial results, probably not even that much financial projections. You're more betting on team, on strategy, on product. And those are the things in executive management that you focus on, at least until you're a public company. Then you focus on the quarter. But yeah, so there is a lot of carryover. Now, I was the CFO, but it was a pretty small and it was very tight knit team, and I was also the head of planning. So I did get involved in most aspects of the business, everything pretty much except claims, which is just quite a expertise, specific for experts in the insurance industry. This is the most fun of the three positions for sure. Um, I realized, I didn't realize when I got out of university, but I realized a bit later that it's all about variety of work that draws me in. If I did the same thing every day, it would kill me. And I was really lucky my first time. My first job actually wasn't, it was with a different insurance company. The individual who founded the one I worked for 9 years in the middle of my career. I worked for him there, and I was very lucky to work with different parts of the business, different departments, different products, and that variety is just absolutely what keeps me going. And and we're quite diversified within our portfolio. We don't focus on a vertical. We don't even focus on software. So so it's the investing experience is probably the bulk of this interview. Um, that's a very broad question, but in terms of comparing it, it's um, it's 100 times more interesting, and you actually have an impact. You don't have. I mean, the truth is that very few um, investors in public markets add meaningful value over any length of time. Almost none, in fact, over any length of time. And I think that many public markets investors just had a nice little run at the beginning of their career where they established a reputation, and then they kind of hug hug the index. They just don't want to underperform the S&P by too much. Whereas, it's not all alpha in our world, but it's pretty darn close to all alpha. And that's great. We love betting on ourselves, on our own decisions at GreenSky.
Cool, awesome. Um, maybe for startups as well. I mean, you've heard a lot of pitches. A lot of entrepreneurs came and gone through the years. We obviously at GreenSky see over 1,000 startups, and we invest very few every year. So you've seen a lot of decks, you've seen a lot of pitches. I'm just curious to know, what are some of the things that stand out to you when you see an entrepreneur? Maybe what are some of the things that you like to hear from them, or where you focus your attention in that first 15 minutes, half an hour that you're in conversation with an entrepreneur, and what draws your attention?
Um, I bet you some of my colleagues have answered this question the same way, but knowing their stuff. If you if you don't know the answer to the question on the spot, unless it's a really out there question, that's a pretty big negative. We are never going to know any of our entrepreneurs' businesses more than 10% as well as they do if we're betting on the right entrepreneurs. So that would be the first thing. Don't go out to raise money unless you're obsessed with your business. Listening, it's a two-way street, obviously. But if you're going to have a long-term relationship with someone, which it almost always is, you want to believe that they're, and I think it's helpful certainly for them if they have genuine interest in your opinions, your take on their business. I like entrepreneurs who say we rather than I. Not everybody's like that. Some people think that shows a deeper sense of ownership, but it's a team game. It's a team sport. And I do like to hear people talk about, they don't need to go a ton into their team, but deep inside, they think I think that's a significant positive as well.
So you've been with GreenSky over 10 years now. You've made over 30 different investments in over 30 different startup companies. I'm curious to know, what was probably the happiest moment, most exciting moment for you, maybe after investment, maybe after an exit? What stands out to you?
So our biggest exit from a financial perspective was a cybersecurity company called Rank. But our second biggest exit was the most rewarding, I think. There's a company called Cyclica, and Cyclica was pretty well covered in the Canadian startup ecosystem in the media. Some people might have heard of Cyclica. They sold about 3 years ago now. But we were with them from the beginning. In fact, going back to those Rotman business plan competitions, those two competitions, the venture capital is how I met GreenSky, and the business plan competition was how we met Cyclica. So that was the very first thing. The original founder had this business idea. He did win the competition, but it was just an idea at that point. So when I graduated and started working, once I'd been at GreenSky for a few months and got a pretty good idea of what we were looking for, I called up Jason Mitakidis, the founder who recently passed away, and sat down to tell me more about this business. And he came in, and this was actually in those EMD days, GreenSky Capital rather than GreenSky Ventures days. And we put together a round for him, and then we invested in it in our first fund, and reinvested as well. It was quite a journey. That the reason why that experience stands out so much is because, I mean, how many startups are on their third CEO before they have meaningful revenue and have a very successful exit, like 1 in a million. It took us a while to find the person with the right skill set who didn't even have a healthcare background. I haven't talked about what Cyclica did. It was very short story drug discovery through a software platform. And yeah, Naheed Kurji came on board and really turned the business around. And yeah, we supported him through some tough times after that. Maybe nothing quite as tough as going through the first two CEOs not working out. But yeah, incredibly rewarding. Became close friends with Naheed. There's a lot of this comes back to Rotman. That is, of course, how I came to Toronto. But he was honored. They only honor three business people a year at the Rotman Honors, and he invited me to do his introduction, which was pretty exceptional experience. So Cyclica was the most exciting. It was bought by a company called Recursion Pharmaceuticals, publicly traded company in the U.S. And boy, there's a ride owning stock in Recursion. We've exited it all now as a company. But yeah, Cyclica was the story. If there's one story that I'll tell from these past 12 years.
Curious to know if you can share a bit more details on GreenSky's involvement, because we, like, when I talk to entrepreneurs, I tell them we're we're active and supportive as much as you want us to be. Obviously, we bet on the entrepreneurs, but if you need help, if you need support, we have folks on the team that have a lot of different experiences in different verticals. We have Mike List with years of M&A experience. We have Aldous, who's very technical. Now we have Jeff Burnett, who has gone through a bunch of M&A, serial entrepreneur. So we have people with a ton of experience to support entrepreneurs when tough times happen, when it comes to technology, when it comes to negotiating a master service agreement, et cetera, et cetera. Things that, in my opinion, like other VCs either don't have enough time to be able to support their entrepreneurs on, or don't have these skill sets within the team. Tell us a bit about the involvement of the team.
Yeah, I mean, Mike's not one to pat himself on the back in public, but it's a heck of a thing that we bring to the table, especially at a seed stage, because um, you know rank not succeeding so early, and they're about 500,000 ARR. So it's so early in the life cycle that you're typically almost getting kind of friends, family offices, and yeah, to have a corporate M&A lawyer who's basic, he got co-founded a boutique law firm, and they focused on representing smaller clients, and very often with bigger clients on the other, or bigger companies on the other side of the table. So, yeah, that's a unique value add, probably at any level, but certainly at the seed stage. Rank's team was so technically strong that Valdis, simply understanding how difficult it was that we were doing was very positive for us on an investment side. I don't know that they needed advisory help on that side. As they scaled, they would have, because as he scaled into the thousands of people and hundreds of millions of revenue as a CIO. So that would be valuable as well. And certainly, Moen, you're as connected as anybody I know within the ecosystem, as well as your deep scientific knowledge. That's what we bring. As you know, I have you as an observer in every company that I sit on a board for, because of the value you bring to that. So, and yeah, I mean, we haven't mentioned every member of the team, but believe me, there's not a weak spot.
Yeah, absolutely. I mean, that brings me to this question that I was wondering. What do you think? What do you think is the main reason for GreenSky's success today? Like, is it the team, our commitment to our LPs, our thesis, a mix of
Yeah,
all of them?
I mean, the team is going to be the first thing, but the dynamic between the team goes a heck of a long way. So we've built a corporate culture of honesty, transparency, and forthright behavior. Like there's the saying that you argue like hell behind closed doors, and you're in consensus outside of them. Um, and our investors could tell you how honest we are as well. We really believe in not wasting time on bullshit. I remember being at our holiday dinner a couple of years ago and looking around the table and saying, none of these people, I've never seen these people have an argument other than being impassioned about their opinion on one of the companies. So we've got an amazing corporate culture, and it shows up in the lack of turnover as well. Only one person has ever left GreenSky, and this was someone who was kind of driven by impact to get involved in something climate related. So yeah, I'm proud. I've been in a company that grew from 20 to 200 people while I was there. The first company I worked for went from 500 to 900 when I was there. And then Neuberger Berman, the company I worked at in New York, had a quite a unique culture, but it's hard to build. And, if we doubled our size, maybe we couldn't maintain it. We probably, you kind of don't have to get that big in venture. But yeah, I mean, I think it's important that entrepreneurs know that we're going to tell them the straight dope.
Nice. Yeah. I mean, from my perspective, when I joined GreenSky as a junior, um, obviously didn't have a lot of venture experience. I worked at Creative Destruction Lab, worked at a startup, had science background, but there were a ton of things that I did not know. But I think the way the team wanted me to get involved in the conversation and not be afraid to voice my opinion was very meaningful for me. Especially when you're working with a team of like 10 people, these are the people that you're going to be spending all of your time with. So culture is the number one thing, like being able to communicate all the time, and especially for us, you're always in the decision making mode. You're always making a decision every day. You're like, is it a go? Is it a no go? Do we do this? Do we do that? Like you're making decisions every day. And everybody's voice is heard, even though it's like out of ordinary, even though it's different. We want to hear everybody's opinion so that we make sure that you're not missing on any perspective.
Indeed. And in fact, it's expected. It's pretty easy to hire people in our industry because they're correct in thinking that it's a really interesting job. And yeah, we don't need wallflowers. We need people who contribute. And we've got a heck of a group of brains around the table.
Cool. Awesome. So, Greg, tell me about your side gig. Everybody asks me, oh, Greg
Sure.
is in the movies business. Tell us a bit about that. And also maybe tell us how relevant it is or how similar it is to venture.
Hmm. So, yeah, to what you're talking about is that at first I started investing in films, individual films, and now I have a documentary production company with two executives out of LA. And yeah, I mean, the similarity is the risk, the risk factor. It's pretty similar risk. The biggest difference is the returns. You've got if one out of every tech companies blows up and gets 20x or higher, one out of every 10 films blows up and gets you a 20% return. It's brutal. It's really tough, which is why I made that switch. When I started, which was right when I moved to Toronto, my first film came out in early 2013. It was let me start this question again. So not start the whole question again, but you're gonna have to edit this. When I started the film industry, the independent film industry still had some momentum from the 90s when Quentin Tarantino and several others made Sundance like the place to be. But it was getting harder, and I'm sure it wasn't easy even back then. And then over time, streaming made it impossible. It's unfortunate because there's nothing I like more than seeing an independent artist with their own vision be able to put that vision to life. But there's just not really a market for it anymore because everybody just goes to streamers, and the streamers' algorithms have told them if you don't have these small films, you're not going to lose subscribers anyway. So that's why I made the shift. A documentarian I worked with on two films. we partnered up with actually Danny McBride's company, if anybody knows that comedic actor, Kenny Powers on Eastbound and Down. With the idea of making documentaries that are fun more than anything, entertaining. We're not making advocacy issue based documentaries. We're trying to entertain with heart, and we develop projects, which means we get them ready to be shown to potential buyers, and the buyers are streamers. Um, it's possible we'll take a movie here and there to the festivals and hope to sell them, but what we do spend 95% of our time on is getting a project ready and taking it to HBO, Netflix, Hulu, Peacock, these other streamers, and trying to get them to pay to make the film or the television series. And and then we take a percentage for doing that for them. So it's super fun and it's very different. Another similarity though is you get a classic startup might have the CEO who's a tech visionary and a COO who makes sure it all works. Tim Cook at Apple might be that. Maybe at the very beginning of Apple, there's two visionaries maybe, but Tim Cook, Steve Jobs would be a great example of that. And then in film, you've got the director and the producer. The director is responsible for what you see on the screen, and the producer's responsible for making it happen. So it's similar in that way as well. And I like working with visionaries. It's a wonderful experience, whether it's tech or a film and television. I'm lucky to do it.
And you have one show now on HBO, Telemarketer.
Yeah, telemarketers. I finally had a hit. It was the 9th or 10th project, but it was a genuine hit. It's on Crave in Canada. I assume most of your listeners are Canadian. It's about telemarketers in New Jersey, and it's funny. Basically, you got these telemarketers who you get these nobody wants that job. It's a tough job, and it's really great talking to people who did that job, who saw it. But this individual dropped out of high school. The only job he could get was this telemarketing firm. He goes there, and half of the staff is more than half the staff is felons. The rest are high school dropouts, just people who can't get work otherwise. And it's just a crazy atmosphere. And they're raising money for police unions is the core of what they're doing. So that irony there is kind of what kicks it off. And ultimately, these two misfits investigate. So it got nominated for the Emmy for Best Documentary Series, which was really exciting. And it got really good ratings. It was their highest rated series in 2023 in documentaries. So please watch Telemarketers.
I have one question myself. Is obviously you see a lot of AI these days, AI for movie production, AI for video generation. How do you see that shape the industry?
Well, so the big budget movies are using AI for what you're seeing and hearing on screen. I remember I heard a podcast probably about 2 years ago. So early on, pre-chat GPT. And they talked about how if someone's giving a dramatic speech now, they don't blink. The AI has done that. And if they say something that's slightly, that isn't perfectly enunciated, they'll change that. They now have the capability of changing people's lips when they do when it's moved to foreign markets. In the independent documentary space, it hasn't really had the big impact yet. Having said that, my business partner, career documentarian, my business partner on the documentary side, Adam Balalo, has a feature coming out early next year called Deep Faking Sam Altman. That is essentially about his stress about whether he's going to be able to continue to exist as a filmmaker in the near future. So yeah, watch for it. It's played a few festivals, and I hope it'll get a Canadian release. It'll definitely be playing in multiple cities in the U.S. and we're going to screen it for Canadian buyers in the near future in the hopes that it gets put on big screens or at a minimum streamers in Canada as well.
Very exciting. Well, Greg, thank you so much for being with us in this episode of Green Sky.
Sure. I want to point out that the lighting is actual real light. I'm not someone who uses I forget what they're even called, filters. This is not a filter. This is my
This is
complexion.
real light.
this is this is my golden hour complexion.
Awesome. Thanks, Greg.
Okay. Thanks, Moen.
Cheers.